Hi, thanks for joining me for this edition of Trends Talk. I'm Brian Beaulieu, CEO and Chief Economist of ITR Economics. Appreciate you taking a few minutes out of your day to join us. I want to talk some more about the leading indicators. It's not always easy to discern what is going on with them. They seem to flash upward, they flash downward, particularly if you're not looking at the right ones. It can get rather disconcerting or downright confusing. Stock market is one that a lot of people will tend to latch onto, and just a word of caution in terms of the stock market. It tends to be the most volatile, gives sway to news items a lot more than the other ones will. For instance, today being December 3rd, stock market dropped 350 points after the president warns that the trade deal with China doesn't look to be all that close. You may wait until after the 2020 election to try and wrap things up. And he slapped some tariffs on France, for instance. So the market reacts badly to that. Tomorrow the market may react totally differently. It may decide that, oh, that's actually good news because maybe it means the Federal Reserve will lower interest rates yet again. So we don't get too bogged down in the day-to-day machinations. It is one of the indicators we look at, the group of indicators, and right now we have 8 that have turned up. And Alan and I will be talking about those and others at the December 17th webinar we are hosting called Prepping for What's Coming Next. And that specifically refers to 2020 and a little bit beyond. The other indicators I think are far more important, although we obviously look at the S&P 500 and taking a moment to just talk about that because it is popular anyways. We're getting positive rate of change signals. We have these checking points of cyclical progress. And as of the November end of month data, we have 112 rise above the 12-12 rate of change. We have a 312 rising above the 12-12. We have a 12-12 rate of change that is up now for the last 2 months. So we're going to catch some downdrafts like we did apparently today, December 3rd. December is typically a weak month, though, particularly compared to November. If you look at the typical month-to-month percent changes, December doesn't hold a candle to November. If you look at the averages, you look at the majority range, December is going to be more volatile and tends to have a bigger spread, particularly on the downside. We may or may not see the rate of change stutter step in December. I don't want to forecast that. All I'm suggesting is that you just keep it in context. Our optimizer model, and there's a leading indicator that we developed specifically for the optimizer model, is still, as of December 2nd, the first business day of the month, was still telling us to stay aggressive in the market. And that helps me relate to you that, take the broader picture. The other leading indicators are moving upward. The stock market is going to be one that tends to be a little bit more volatile one way or the other. The broader term picture is you and I and anybody else that is moving in concert with GDP, in concert with U.S. total industrial production, should be planning on a better 2020, particularly in the second half of the year. Key signal to that is the housing market, for instance. So if you're tied to housing, I hope you're gearing up for a better 2020. If you're a lagging economic indicator like non-residential construction, that's going to be spotty in 2020, and some parts of it are going to slump into 2021. So while I can talk with you about the leading indicators, you need to, at the very least, know how you fit with the general economy vis-a-vis either GDP or housing or non-residential construction or U.S. industrial production, and track those using the monthly trends report. Better yet, run your own data through rate of change and relate it to the leading indicators, or if you want, we can do that for you. There's nothing like seeing how The leading indicators can anticipate your company data both on the way up and on the way down to instill confidence in you, particularly through time, that this is a great way to be ahead of the curve. I remember the first time I did it way back in the day, and I said, the indications are we're going to be doing better, so let's hire. And I remember we were a very small company at the time, and my colleague is saying, you sure about this, Brian? I mean, things look tight out there, and certainly our cash flow isn't great. And I said, look, it's going to take 6 months to train somebody up so we can start making them useful in the marketplace, and by then we are going to be through our low and on our way up. It's hard-won stripes, knowing that this works. It can work for small businesses. It can work for large businesses. I can tell you, like I said, the leading indicators are going up. I can tell you what that means for GDP, and generally you can know what that means for your business. But if you really want to drive it home, compare your own rate of change to those leading indicators, compare yourself to some market trends, and really see the future before it happens. Maybe that's the big takeaway from this Trends Talk. You have the means to see the future before it happens, objectively. And that's one of the beautiful things about what we do. It is objective. It isn't based on we hope, we think. It's based on math and observations and probabilities. And it's a nice way to go. See the future, plan for it, prosper in it. Up or down, there's ways to make money. Thank you for listening to this Trends Talk. Very much appreciated. Again, this is Brian Beaulieu, CEO, Chief Economist for ITR Economics. Until next time, take care of yourself.